Welcome viewers, welcome listeners. I'm Alex, your host of Momentum Works Answering the Why series. Typically, you'll find me mainly hosting EOA, Entrepreneurs of Asia, the podcast that interviews founders, entrepreneurs, and investors impacting the Asia startup ecosystem. But today we are continuing our collaboration in discussing openly and somewhat more concisely around specific topics of interest, be it trending news, relevant topics, concepts, or ideas impacting the tech scene in Southeast Asia. Today we have with us the usual suspects, and possibly some audience guests who will join us for some of their thoughts later on the topic. With us today is Jianggan, CEO of Momentum Works, Alfonso, Head of Insights, and myself, the founder of EOA, Entrepreneurs of Asia. And maybe two other staff who are millennials will join and give their opinions on today's topic, right? And today's topic is buy now, pay later. So guys, what exactly is buy now, pay later, and why is this news all of a sudden?
I think many of you some of you might have heard of this Australian company called Afterpay, and during the pandemic, its stock price has been performing very well. The business model is very simple. So you go to a point of sale, you want to buy something, and you don't pay now. They offer you a credit service that allows you to pay either after like a fixed period of time or with installment. So this is very similar to what some of the credit card companies are doing, and it's also the exact service that brings in the most revenue for Ant Financial's services, right? Huawei. So the model is not new, but I think it's gaining lots of traction recently. In Southeast Asia, you see quite a number of stickers that are on the merchant side that says that, okay, if you're a registered customer of this service and you buy a big piece of furniture here, you don't have to pay immediately, and you can just pay by installment or later. So it is gaining popularity. I think some of the big platforms are doing that. The term buy now, pay later is something relatively, I think, new, because many of my friends have just heard of it, but the concept has been around for a long time.
Yeah, definitely it's something that I think traditional retailers have had for a long time. It's quite mature in the offline space. I recently bought a piece of furniture for IKEA, and they give me 6 months, 0% interest, and you can just pay every month a little bit, right? So, but I think what Jianggan is pointing out is, and I think the Ant Financial news is interesting because it's not the same trend of what we're seeing in other markets. So the bigger buy now, pay later guys are Klarna, Affirm, Afterpay, QuadPay. I think what I suspect and what I've been reading, it's making it more relevant, is that how much they've grown in the past 2 years. We're talking those companies have grown from 100 to 200% year over year, right? From 2019 to 2020, largely driven by the pandemic trends, right? Of people shopping. And I guess maybe there's a pinch. People are feeling that they don't have as much money and they rather spread out the pain, or I don't know. Does that sound right to you guys?
Well, you use credit cards.
No, I just
go ahead.
No, I just want to say that one of the also other reasons that these companies are rising very fast is that they are not so the checks in order to approve some sort of loan are much more faster, and they don't scrutinize too much the different kind of users in order to approve them. So it is fast, and basically this allows them to penetrate and to enable a large portion of the population to actually be able to purchase different items immediately at that specific time, right? So that is one of the reasons, is that basically the companies the company's credit check, or the credit history of the user is very fast.
Well, from what I understand, it seems like they're using different data points from retailers and combining it across different data sets too. There is some kind of check going on, but it's not the same way like a credit card company does a check. It's definitely, there's no paperwork or anything like that. And I think it's like you said, maybe it's, I don't know how they manage the risk side of it, but it's probably a certain basket size that they can manage. And then they just and I think as long as you are agreeing to shorter terms, right? I went to every single website, and it seems buy now, pay later happens across 6 weeks, across 4 payments, if I'm not mistaken, which is a little bit longer than a credit card cycle, but it's almost acts like a credit card without the interest and all the extra fees on the front end, right? But of course, I think what's hidden is that if you miss a payment, which a lot of people do, they also charge almost as much as credit cards or even more, right?
Right. Yeah, that's the business, right? And I think that, well, it is a risky business, right? You're offering credit to people that in some cases doesn't have any kind of history, and you can think in the audience, in basically in the millennials, for example, and obviously they don't have any kind of history because they are just starting. Having some money and basically spending in different kind of things. So that is one of the reasons of the rise. And also another reason is related to the kind of products that they are lending, right? So it is usually concentrated in price in items that are a bit more cheap. We are not talking about big things like a car or something like that, right? We're talking about the smaller items. So that could also explain the rise.
Yeah. Well, I mean, at the same time, I've been reading some interesting statistics, and while you're right, it's not going to be something like a car, but we're talking where people with normal purchasing behavior might be a few $100s could easily double or triple the basket size because people feel less pain when they're doing that. And I think people are definitely adopting that, which I guess, I don't know, what are the pros and cons of that, do you think?
No, you go ahead.
So I think from consumer point of view, if somebody offers me free credit, why not, right? I mean, I think all of us use credit cards, and for one reason or another. I mean, for some of us, it's the ability to consolidate all your payments into one bill, so that your bank account is relatively clean. And for some people, it's to get the points, get miles from the credit card companies, from the banks, and I think there are some people who just who just like to spend, and of course, credit card will give you something that's usually above your monthly salary, and that allows you to pay back later. So if there's a free credit, why not? I think that is the mentality. But of course, some of us are better at managing our own sort of credit than others. I mean, look around you. You have people who are able to pay back their credit card bills. So credit card essentially becomes a tool for them to manage their expenses. But we also have people who have their credit cards maxed out, and they only pay the minimum payment or part of the payment every month. So at the end of the day, it's pretty much down to the individuals how much they can control that. One thing I think about buy now pay later is that I think for most of the countries it's not really regulated yet as a financial service. So if you buy something from one of the services, it doesn't really add into your credit limit that usually the regulators put, right?
Yeah, I mean, regulation, I'm not too sure. So none of my research kind of came across that. But I think you're kind of getting to the heart of one of the big arguments against buy now, pay later, right? Which is I think people who are of good credit, who use credit cards responsibly, they have the cash always to pay back whatever they put on their credit card each cycle. For them, it's just another option, right? But at the end of the day, they're just going to pay off. But what this introduces is it gives another avenue for more bad actors to put themselves in more debt. And stacking it, you're stacking even more debt that you can't even see across so many things because it's becoming so widely available. Which, at the end of the day, what do you guys think? Does this lead to a bubble, or is it too early to say, or how do you guys think about that?
Well, I think that in many cases you're not going to be able to see the problem until you have some sort of shock. So COVID-19, maybe it could have been a shock because in many cases people won't be able to pay back all of those, like the loan, right? So
yeah.
So I don't know about how sustainable is the business in terms of the interest rates and the different kind of fees that they charge to the consumer itself, and also I think that in many cases in terms of interest rate it tends to be very low. I think that one of the major sources of their of revenue is actually comes directly from that kind of outstanding fees that they are charging. So I'm not very sure about the future in Southeast Asia. What I do know is that I think that there is some sort of perfect match between the target about the population itself of Southeast Asia and actually what they are offering. Because if you think, you usually may think that the target audience is millennials because they don't have a credit history and all that. But in the other hand, you may think that there is a large section of the population in Southeast Asia that they have like informal jobs. And that's it's a big part of the population itself. It could be like, I don't know, 70% of the population is working in something that is classified as informal. And basically, informal is something that you don't have any kind of paper, you don't have any kind of history. So you may think that it can work because you're applying the same kind of mentality that you are oriented towards millennials, but now you're applying that kind of mentality also to that kind of population that wasn't enabled because they were working in the informal sector. So that's another some sort of match, but it could be dangerous too. It could be risky.
Let's say, go ahead.
I personally think that it's of course people talk about, I mean, giving credit services to people who don't have credit history, giving credit for people who don't have access to credit. We built a fintech venture in Indonesia, and we managed to sell it to a large corporate, and during the process we learned quite a lot about how it works and also the consumer behavior in that. The general sense is that you will be very, very careful about giving credit of any sort to people who don't have a fixed income, so who don't have a steady stream of cash flow. Because if they have the cash flow, then you can find a way to optimize that. I mean, pay off this, pay off that. But if they don't have that, I mean, things can be quite tricky, and it can open up to quite a bit of risk. So yeah. But on the other hand, I do feel that lots of people who use this kind of services are the people who have credit cards. They're used to having the convenience of paying on credit, but for whatever reason, and the credit limit they have is not enough for them to say that, okay, I want to buy this, but my credit card only has this limit. Now there's this option for me to do it. Why not? Yeah. Why not?
I think what's different is that credit card. I mean, like, so look, let me share some stats from the U.S. at least, right? So, 7 out of 10 buy now pay later users earn more than $75,000 a year. So they're highly educated and they all have a bachelor's degree, right? So 97% of them have at least one credit card, and it's mostly millennials who are using them, right? So 18% of them are 26 to 40 years old. 9% are Gen Xers, 6% are Gen Z, and 1% Boomers, right? So it's very kind of well distributed across millennials, but it's people who are educated. And why I point that out is because I think credit card, these people know that they're going to be paying extra at the high exorbitant rates if they kind of delay payments for interest, and at the same time it also may dink their credit scores, right? So it's an option where you're not going to dink your credit score and still can get, basically free credit. So it's not really like, I don't see it as them not, it's not like that. There's no reason why they want to use it. It's a different product completely that just, I don't know, it's just free money almost in a sense, right? And just less pain, and it's just there. So why not?
Oh, you know what? It is free money, right? Because most of the buy now pay later services, you don't really pay additional cost. It's like you still pay the same thing, but at a later date. So if anyone understands the time value of money, so this is essentially free money.
Yeah, definitely.
Go ahead.
Yeah, so I mean, but I think you guys are pointing out rightly. I think what's going to happen, you're going to see a very interesting dynamic, and I don't know how the companies are going to respond to it. It's just like there are some other interesting statistics here from like other countries like UK and Australia, where 43% of all buy now pay later users for this country, they have been late on their payments, right? And then the questions that no one's talking about is the default rates, right? So like I want to know, like, when do you write it off? When do you stop chasing? And when is this going to be a problem? How do you actually manage that, right?
But essentially, at the end of the day, it's credit.
Yeah,
and it's credit. I'm not sure whether in the US or in the UK, it's you mentioned that it doesn't get into your credit score, and I think it probably doesn't get into your prescribed limit set by the authorities, right?
Yeah.
I mean, in Singapore, I think in Singapore for credit card you can't get more than 2 times your monthly salary, and you can take up other loan facilities which are not more than two times. So essentially, you can get 4 times your monthly salary as unsecured credit, but buy now pay later, I think as of now, it's not counted as part of that.
Yeah. I mean, so
yeah,
go ahead.
Yeah, go ahead. Yeah, it allows people to take additional leverage.
Yeah.
And yeah.
So I mean, at the end of the day, what we're seeing is, I mean, I think maybe we're all cynical about this, right? But I'll play devil's advocate. The upside of this is that only 2% of total e-commerce sales has been buy now pay later, but it has grown by double in the past year. So we're talking about massive growth rate, and it's not even widely penetrated yet. So I think what maybe VCs and what other people are looking at is this massive opportunity that's underpenetrated. User behavior seems to match to it. And if you look at the profile of what I shared from the US, in theory, it sounds like these people should be able to pay it off. It's just another form for it. So I guess that's the argument, that it's a big opportunity that's just going to be widespread normal behavior in the future, where everyone's just going to be doing buy now pay later instead. I don't know. Do you think that's a credible viewpoint to take? Should we just look at the growth and then deal the downside later, or do you think it's just going to be very cancerous that we can't control it later?
Well, I really think that it could be a bit dangerous in terms of, especially if you have like illiterate people using these kind of services. And as you mentioned before, one of the statistics was related to like one of the recurrent types of people that were using this kind of services. They have a history of not paying their loans or something like that. So I think that is interesting, because it seems that the way of like the consumer behavior seems to be repeating itself. And basically that is also one of the consequences of being not very responsible with your finance, right? But to be honest, I don't know enough about the way that people is thinking to make an opinion about this. I don't know you. I don't know about you, Jianggan.
That's a good point. I think in a little bit, what we can do is ask some of the guests to come on, and they could share some of their thoughts and see how they think, and maybe that should give us some insights, possibly. But before we do that, I mean, like, so what do you guys think? Is there an actual new innovation, or are we just kind of just mashing up and then just putting it from here to there, but it's the same shit, different smell?
Well, it is an extension, right? As you mentioned in the beginning, like the offline retailers were already offering that, but what these companies did was basically to extend that and to offer that to, instead of just being a service offered by one specific retailer, now it's offered to everyone in a not in a free way, but everyone can have access to something like that. And I think that is one of the key advantages, right? So I think that is an extension, but we shouldn't. I think that we shouldn't. I think that it is something good in terms of like being an extension. It's not something bad, right? There are many good things that have happened that are extensions of.
Well, okay, let's take a position here. Let's make a call and let's make a prediction, right? So each of us say, do you think this is good or bad, right? For a net positive for society, or will it be net negative? And will it be big and successful, or will this fail? So Jianggan, you first. Good or bad for net positive society? Will it be big and successful, or will it fail?
Okay, so this is actually a number of questions. I think it's good for the society. I think credit in general is good for the society, especially when we are living in a pandemic. Anything that boosts domestic spending helps merchants, hire more people, and it helps with the economy in general. So I think if you look at the entire history, the availability of credit, moves things faster forward, right? Yeah. And that's finance. So will it be successful? I think I think if we put that in a context of credit cards, but facilitated or distributed in a more efficient way, in a more sort of frictionless way. So I think it would be successful. But the question I'm a bit skeptical is that who will be the players that take this advantage?
So I think you're bringing up a really good point, because this is something we haven't discussed. And the reason why, at least on the merchant side, why they want to be adopted, because they will do anything to avoid those transactional fees from the banks, right? Tied to credit cards. They hate them. And in this kind of way, I guess the model is innovated in terms of how these buy now, pay later companies make money. So they don't take that transactional cost. In a sense, the customer benefits from another option, which I think is less value. I think there's way more value on the merchant side to adopt it. And the guys who are losing are the big banks and the big credit card companies. So it's just essentially you're just shifting. It's a typical finance. You're shifting one part of the pie to a different part of the pie. And in theory, good for merchants and better for customers, I guess. Right. So, I mean, that's interesting.
Yes. You are basically eating a lunch of the banks who were previously offering credit, and whether they can effectively fight back, whether they want to fight back, or whether they want to become
or join
the part behind you, joining you to supply the credit and without having to manage all the hassle of customer engagement, etc. So that's something we need to figure out. Yeah.
I mean, it's interesting that we're talking about this now, because I think PayPal has like a monopoly on this. Or like, I mean, they're the largest, buy now, pay later shareholder in the U.S. and they acquired a company, I think, years ago who are doing this. But it seems that they were ahead of the curve. And now I think it's starting to get widely adopted, and we could see the positive effects where maybe more merchants shift over, which means like that solves the distribution problem, like credit cards, right? It's just widely available, then consumers will take it up as another option. So let's be clear. All right, so you're saying net positive for society, and it will be successful, but it's just there will be some other losers, basically.
Yeah, so not all the players would eventually live to the day where the whole thing is successful.
Will it be monopolized, or will it be fragmented across country to country? I guess player to player.
I think
that's a complicated question.
I think it would be relatively concentrated, but it would not be a monopoly.
Okay, so a handful.
A handful. If you look at if you look at the banks, you don't have a monopoly in banking.
Yeah.
So but you have the few big banks, and sometimes you can have one specific big bank in the market which owns like 40-50% of the market. Yeah. But you have an array of other banks who each own like 5% or 6% of the market. So that's possible. In China, so the biggest buy now pay later companies and financial with this Huawei, but it doesn't own the market, and it doesn't own the transactions that's going through. In that, for instance, Alibaba's rival e-commerce platforms. It doesn't go through JD.com, it doesn't go through Pinduoduo, and all of the Tencent affiliated companies will not use that. So at the end of the day, I think unless commerce is monopolized, otherwise buy now pay later will not be monopolized.
And in that vein, though, do you know anything about the user behavior for China? Like, are they readily adopting this? Is there any stats you know about? What's driving it?
There are some stats that Ant Financial announced themselves. I think it's like 60 million people.
Okay.
With the age between I think in their 20s. Using their buy now pay later service as of September last year.
Wait, 60 or 16?
60.
60 million. Yeah, that's crazy. Yeah, okay. That's a lot of people.
It's not a lot.
It's a lot relative to what the other stats we're seeing from other countries, right? So of course, in the scale of China, that's like nothing. But like that's the tip of the iceberg of what we're talking about, and I guess that's what we're looking for the trend to unfold. Okay. So Alfonso, then you net positive for society, net negative. Will it be successful or not?
Yeah. I don't know if it is going to be successful or not, but the thing is, how are you measuring that kind of success? Maybe, for example, from an investor point of view, maybe it is going to be a success because there is this kind of hype behind all of those companies that are using technology in order to make this happen. But I don't know if for the society itself it is something so positive, especially if you think that these markets are very, as Jianggan said, are not very well regulated. So if you allow these kind of companies to appear in countries that there is a high financial illiteracy, then what you can expect is that maybe like some of the people that will ask for this and that cannot pay this in the proper time, maybe they will actually take more loans in order to pay off the debt. And I don't think that is something positive. And if you think that in most of the crises, all of them start by something like that, like the subprime mortgage crisis. It is something related to that. It's like using a lot of loans and debt and all that.
All the crisis came from excess leverage.
Right?
Excess. Yep.
Yeah. So for example, I'm gonna take a more traditional role here, but I don't think that it is so positive. It's like the shift from the like capitalist point of view to the neoliberalism point of view. Is that now in neoliberalism we're just gonna unregulate everything, everything is gonna be open markets and all that, but basically what we have seen is that in the last 30 years that this has been happening, like most of the countries, the GDP growth of all of the countries has not declined but has stalled, and that is very sad. And actually in the previous period, after that, basically the industrialization and the modernization, basically it was increasing very fast due to the basically increase in the productivity. And after that, all of that basically stopped because using this kind of neoliberalism policies, and that is actually a bit sad. But yeah.
So back to the details of this business model, and of course, so the companies which are offering credit would need to do some kind of assessment. I mean, of course, some companies in the early stage, rush to acquire customers. They made it like easier for people to obtain credit. If they can afford to absorb some loss. We know one company in Indonesia whose name starts with A, which did that. Initially, everyone gets credit. So the approach is that through this, we're going to assess who are the good customers, who are the bad customers. Then we tighten that along the way. So maybe 100% or 90% of the people who apply would get credit in the first month. But after 6 months, and I can do very, very quick iteration, maybe only 5% of the people will get it. But of course, most companies will take another approach. You start with you start with 5%, and then you gradually relax. And I somehow feel that the approach taken by banks, that they start with something conservative, and then if it shows that this is okay, they can relax that a little bit, and also that's controlled by regulations.
Correct.
But I think for the companies, they usually don't.
Yeah. So exactly. I mean, I think we're hitting on both parts really well, and I think Alfonso's point is very astute in saying that while net positive, you get more choice, more capitalism, more options to keep making the engine run. This is not something that's going to go unchecked. It's not currently regulated, and confirm you're going to find some bad actors. It's just a question of how big those bad actors get, and to what scale, right? And if it's optimistic to think that I think what happens if traders and people and systems is that they look at the rules, they'll exploit it, right, to the max.
Of course.
So I think that's I would be very optimistically cautious, and I just see this more of a transverse and shuffling around, not some crazy new innovation. Maybe a behavioral change with the consumers, possibly. It is somewhat different there. In the business model change, there's some inefficiencies for the merchants, which there might be more adoption there in terms of success. And Alfonso's right. Maybe there will be more ROI in terms of investors making money early on, assuming there's no bubble attached to this. Because they'll get the valuation high, then they'll exit, then maybe they'll crash later, right? Typical Ponzi scheme. So I don't know. Any final closing thoughts before we bring on a guest to look from a consumer perspective?
So one thing is that because we're building a venture in fintech in Indonesia, we had lots of close interactions with people who have seen a full cycle or cycles of boom and bust in China's internet finance space. So one thing I remember clearly is that in the past there was this sense that companies offering buy now pay later would have a better way to assess the consumer's credit than companies offering cash loans, because theoretically you know what these people are buying, and you have the data, and you also have this payment installments so that you have more data to track whether people are paying back on time, their behavior, etc., etc. But it has shifted over the last few years, and people sort of realize that the data you get from buy now pay later services are not that much more useful than data you get from cash loans. So it doesn't really correspond to whether people are good or bad in terms of credit, or in terms of their behavior. Yeah.
All right. Alfonso, any closing remarks?
No, not really.
Okay,
Go ahead.
Okay, so let's bring on some millennials and to see their behavior. Let's invite Clarissa and Nanette. Let's get them, turn on the cameras and the microphones, and let's see if they actually have bought something buy now pay later in the past year.
Hi.
Hello, Clarissa.
Hello.
Hello, Nanette.
Hello.
So these are two employees of Momentum Works, right? Hard-working
Colleagues.
guys, powering this series actually behind the scenes, doing production. So guys, tell us, are you familiar with buy now pay later? Have you guys engaged with it? Have you bought something with it in the past year?
Okay, so actually I've not heard of it before, but from what I understand, I have some friends who use it. I actually learned about it recently. Asking around, have you like used this before? Like I was asking around, and yeah, but like they don't use it often.
Okay. What about you, Nanette?
So for me, I heard it like multiple of times because I also worked with Jianggan during the like fintech day. So I kind of know about it. I kind of do some research about it. But if you ask me, have I ever used it? I never use it though.
Okay. So walk me through how you think about buying. Okay. I don't want to assume anything. What's a large purchase for you guys? A few hundred Sing, a few thousand Sing. What are we talking here?
It really depends on like the item itself. If you're telling me a Nintendo Switch is going for $100, I would think that's really cheap, and I would just like give you my money like this. But it really depends on the product.
Okay, so just imagine it's something that's going to cost maybe up to 1,000 Sing or a few thousand Sing. Would you actually use buy now pay later? Something you really want, I guess.
Yeah, I would say if I'm tight on cash and I really need it, then I'll probably use it because like, yeah, if I know I have the capability to pay it later. Yeah.
Nanette?
Okay, so yeah, for me, I would say no. I would rather use the credit card compared to buy now pay later because I don't know, it's just like a stigma here in Indonesia is that when you use the buy now pay later, it's kind of like not as like elegant as per se compared to buy now pay later. Yeah, credit card is more like elegant way. So I would rather choose a credit card.
I mean, okay, so this is a very small sample size. So I don't know. There's no. I mean, I can't draw too many conclusions, but it seems like you guys would not be very keen to even think about the service, or you would just use your credit cards. You guys have credit cards, right?
I have credit cards, yeah.
Not yet. Soon.
Not yet. Okay, soon.
Yeah.
Okay.
But
Go ahead.
I think it's, what Nanette said is really most of my generation would maybe prefer to use credit cards because we have mileage to think about. So like it's like discounts on you have your flights and all that, and us millennials we love to travel, blah blah blah.
That is true, yeah. You get more points, you get more like extra discount, but then buy now pay later cannot offer us anything unless we pay. Yeah, we buy now and then we pay later. That's it.
I mean, you guys are talking like COVID doesn't exist. That's hilarious.
No.
I mean, yeah, we need to consider the fact of the situation we are in now. So I think buy now pay later would prosper now, but in the long term, unless they can have something that offers the same benefits as the mileage from the credit card, it's going to be harder for the long term.
But Clarissa, this has been happening for a long time in a different shape.
Offline?
Yeah, offline. They use like what's the name of that? Like a membership card or something like that. And they usually provide the same kind of service, like 3 installments for free and after that. So it has been running around for a while, and I think that maybe 15 years or something like that. Maybe more.
I think I think it's more than that. Alex,
It's more than that.
you're in Malaysia. You're in Malaysia. I mean, if you go to Ion Justco, and they'll ask you to apply for a card, which gives you.
Right.
I mean, if you buy electronics there, it gives you like an installment at zero cost. So this kind of credit services have always been there, and they help merchants increase the conversion. So I think Nanette and Clarissa mentioned that the banks the credit cards give you mileage, and if these guys can't match it, they will probably not consider that. But let's say that if you have maxed out your credit card, you still want to buy something, what would you do? You would not buy it, or you would?
I mean, that's like an exercise. Let's actually ask them. Have you ever maxed out your credit card?
No, because it's a large limit. Why would you max out your credit card?
Everyone has a large limit, but okay.
Yeah, I mean, who will?
Okay,
you won't. Yeah, it's kind of like 300,000, like 300 million rupiah. It's like $30,000. So I don't know.
Okay.
Well,
That's the next credit limit as a millennial. So I don't think it's very representative.
Well, around her age, that was my limit too. But that's because I have good credit score, and I kept asking to increase it every year, right? So you can improve your score that way. But I mean, not everyone's like that savvy, or maybe have a different position of privilege. Maybe I don't know. Clarissa, have you ever maxed out your credit card?
I don't have a credit card yet.
Oh, that's right. You're not. So you haven't maxed it. So like, I mean, like, I almost feel the question's kind of moot, right? So I don't know. Like, do you ever see? Go ahead.
Maybe you can ask Alfonso whether he has never maxed out his credit card.
Yeah. No. Well, yes, I have done that. Yeah, when buying some sort of, what did I buy? Like flight tickets or something like that in the past.
Okay.
Yeah.
Okay.
So
The only other time I know people maxing out credit cards are entrepreneurs because they're putting everything back into the business. But I mean, yeah, so that's like a different use case. I don't know. So what did you guys, so Alfonso and Jianggan, did you expect this kind of response from these millennials?
No.
Yeah, it almost sounds like I'm talking to an auntie and uncle.
Feedback.
Yeah, for example,
Honestly.
in some cases, you didn't mention something like this, but the psychological effect of buying something in small chunks, it is much easier than buying everything at once, right?
Yeah.
So
It
in
is.
some cases, you have responsible people that is actually paying everything in three installment because they know that they're actually gonna be able to do it, but they just prefer to delay everything in more time, and that's it.
Yeah.
The psychological impact is less.
And I think that's the category of user who already is well educated. They know they have a fixed income, right?
Exactly.
So like that's actually happened to me right now, where I bought a new couch for my new home office, right? And then we know we have fixed income coming in, but I'm not monetizing as much as I used to. So therefore, I was like, okay, let's just lessen the burn.
Right.
Psychologically, you feel better, but I mean, I could have paid it up front too. It's just you see less in your bank, but then it'll be back up the next month, right?
Yeah.
So it's just more of a psychology thing, I guess. So for me, there's no tangible value as a consumer. But I could definitely see it, coming up once in a while, or the merchant's definitely benefiting. So, but I mean, I guess, I know, Clarissa and Annette, any last closing thoughts about what we discussed, or anything you'd like to add before we close out?
I think I still stand behind the point that unless for millennials, I speak for millennials, Asian millennials who like to travel, and I think mileage is definitely. I know friends who got a credit card just solely for mileage because they want to travel and they want to save money. Yeah.
Okay.
I actually, so sorry, just curious. Do your friends use Utrip, TransferWise, or whatever that allows them to go overseas and withdraw cash or pay at zero exchange fee?
I'm not sure. I just know they just a credit card if I like to travel, and like they were telling me, yeah, it's the best way to save when you want to travel and you don't want to pay so much.
Mm-hmm. Okay.
For me, I don't think you have that in Indonesia right now.
You don't have what?
Mm-hmm.
You don't have the Utrip or that kind of services.
Okay.
Yeah.
Okay. So what about you, Nanette? Any final closing words from the millennial privilege?
So for me, it's just like I don't know. I mean, like we had a different perspective though. I mean, if you like to use buy now pay later, you just use it. But then for me, my own perspective is that why I don't use it is because credit card offers you the same thing, but with more points, more benefits for you, and then also they kind of like give you miles, what Clarissa mentioned, for a special card, and then they have it could increase your credit scoring too for the bank. So later on, when you want to apply for the loan with the bank, it's easier. So that's why I choose credit card basically.
So let's say that if Traveloka offers you to buy everything on credit through Traveloka's pay later service, would you use it? Or you still prefer to use the credit card?
But will they get benefits?
Yeah.
Will they get benefits of Traveloka?
They have like a special benefits with special credit cards. So for example, if I cannot mention any bank's name, right? If I use X Bank, and then they give like a benefits with like Traveloka partnership with X Bank, something like that.
I see. Well, you still use credit card.
Yeah, that is interesting, I think, because I don't know if actually most of the buy now pay later companies are offering those kind of benefits to millennials, right? It's all about the final item that they just want to buy.
Correct.
Yeah. I think it takes a long time to build a proper loyalty and benefits program, and we know some of the large internet companies are doing that. It takes a while for that to take hold. Yeah, so it's and it can be quite costly.
Yeah, but I mean, it sounds like we've just discussed the next evolution, right? I mean, if this is the user behavior, assuming they are representative, I don't know, maybe they're not, but if they are, that seems like that's exactly what buy now pay later will evolve to, with more benefits, and maybe they will change their minds later, right? Mm-hmm. Okay, guys. So I think if there's no more closing remarks, I think this was a good place to end it, and thanks for everyone's time then.
Well, thank you.